So we've covered how to amend a return using Form 1040X and the different filing methods. But what if you discover an error years later? That leads us to a crucial aspect of amending, the dreaded statute of limitations. Today's scenario, Racing the Clock, explores just that. Imagine you find a mistake from years ago, a missed deduction perhaps. Can you still claim that refund? Let's discuss this with our expert, Sam. Sam, what factors influence the statute of limitations for claiming a refund?
Good question, Alex. The statute of limitations essentially sets a deadline for how long you have to claim a refund. The general rule is 3 years from the date you filed your original return, or 2 years from the date you paid the tax, whichever is later.
Okay, so 3 years from filing or 2 years from payment, whichever gives me more time. So if I filed early, say in February, but paid the remaining balance on April 15th, the 2-year clock starts ticking from April 15th, right?
Exactly. And remember, returns filed before the due date are considered filed on the due date for statute of limitations purposes. So even if you filed in February, if your return's due date was April 15th, the 3-year clock starts ticking then.
That's a really important point, Sam. Think of it like a race. You have to claim your refund before the clock runs out. Now, Sam, what happens if someone misses the deadline? Are there any exceptions?
Missing the deadline generally means you forfeit the refund. The IRS won't process your claim. However, there are some exceptions. For example, if you were financially disabled during that period, the time limit may be suspended. The IRS defines financially disabled as being unable to manage your financial affairs due to a medically determinable impairment.
This reminds me of what we talked about earlier with extensions for filing. Are there similar requirements for proving financial disability, like needing a doctor's statement?
Yes, you'd need documentation from a physician outlining the nature and duration of the impairment, along with a statement confirming no one else was authorized to manage your finances during that time. It's a detailed process, and the IRS provides guidance on this.
Let's illustrate with a simple example. Let's say John filed his 2020 taxes on April 15th, 2021. He discovers a deductible expense he missed in 2023. He's within the 3-year mark, so he can file an amended return. But if he discovers it in, say, 2026, he's likely out of luck unless an exception applies.
So if I understand correctly, even if I overpaid by a significant amount, if I'm outside the statute of limitations, there's no recourse. That seems pretty strict.
It does seem strict, but it's designed to provide finality to tax matters. Imagine the IRS having to process claims from decades ago. It would be administratively impossible. There is a concept called a protective claim for refund, which is essentially a placeholder filed when your right to a refund is contingent on future events, like ongoing litigation or expected changes in tax law.
That's a great point, Sam. To recap, the statute of limitations is crucial when amending returns. The general rule is 3 years from filing or 2 years from payment, whichever is later. Missing the deadline generally forfeits the refund, but exceptions like financial disability exist. And since we just touched upon financial disability and its impact on the statute of limitations, let's delve deeper into that specific scenario next. Taylor, let's explore the nuances of how financial disability affects these timeframes. This is a complex topic, so remember, always consult a tax advisor or the IRS website to determine the applicable statute of limitations for your specific situation.